segment today. Well, let's bring back Samir Arora into the conversation. He gave us that final warning in the final minutes going into 11 a.m. Something bad is going to come. But Samir, I mean, technically, maybe you can say something bad did happen. Yet look at the market's reaction.
I think, first of all, we should say hats off to our fund management and broker community. I think they should all go and learn from companies like ITC, which have been able to convince the government that, our smokers will stop smoking if you increase the rates, if you increase any duties, and therefore the government does not increase it on cigarettes. But our fund managers and brokers come on TV and say it's a one-day affair and a two-day affair. So if you keep saying that, the government will keep responding with higher and higher taxes till you say the fine balance has been achieved. But my first thing is, it's too early to say, because I remember 2018, which even the new guys in our market will remember. On that day, the tax rate was increased from 0% to 10% long term, and the market fell 0.2%. And then it fell some 15, 18, whatever percent, and the mid caps fell 30, 40%. So it's not like that. But what I'm saying is, this is hardly the day for us to say to the government that great thing you have done, because just look at it big picture. That we have, as a country, encouraged investment into gold. And the whole world, including India for 20 years, was saying, move away from gold and maybe even real estate a little bit to financial assets. So on the same day, we have increased taxes and whatever. But I have one more thing. I can bet anything that the long-term capital gains tax is going to 15% in February. Because you tell me in a big picture sense, let's say 20-year story, 10-year story, everything is frozen, that the capital gains tax is 12.5%. It makes no sense.
Yeah.
It could very well have been 10 in that case.
Yeah.
So you're saying it's going up to 15. But Samir, just very quickly, I think we'll have the FM speaking very soon. It's just, very, very quickly. So are you saying that like 2018, maybe we could have a delayed market reaction? But it's a very different market. I mean, look at who's driving the market. 40,000 crores coming into mutual funds every month.
There is no delay. There is no delay. It can't be falling that much, obviously. That much it may not fall because that time you're right, there were less foreigners, more foreigners, this, that, whatever. And actually the 2017 rally was also very big. But to say that everything is okay when you've increased all the taxes, but more than that, broadly signaled that there'll be another hike in Feb, according to me, because 12.5 is an odd number to have. If it was only this, you might as well have kept it at 10. It would not have made such a material difference to the world. So the good thing is the fiscal deficit, which is a very good number. Yeah. The second good thing is any word you say about tourism, doesn't matter whether it's one or two temples or two places. Every day we should invest in tourism because it's the easiest thing to do. I don't know why that is not made the number one sector of India, not in terms of my stocks, but in terms of where we have to focus, because there is so much low-hanging fruit. Just clean bathroom, just put Wi-Fi, just put some security, some clean, and you have 1,000 places where people can go and they don't.
Got it.
But otherwise, it is okay.
Samir, you're telling us, you were telling earlier that bad news, more bad news, right? So 15% in February is what you're saying. And now, the direction of travel is higher, according to you. From a foreign investor perspective, how does it make Indian stock less attractive, or what's the comparison in that sense?
No, it's very obvious. I don't know why people come and say it makes no difference. Let us say pre-tax. Oh, everybody says pre-tax will make money. So we are, as a market, if you can just see last many number of years, the Indian market in dollar terms has been making around 12%. Okay. And other markets, the good markets, the bad markets have been making 6-7%, and the good markets have been making maybe, like US has made more, but let's say broadly 9-10%. They are not making 2%. So now on that 12%, we put an average tax. And please note, please let us not say that the long-term tax is 12.5%. There's a surcharge. It's about 14.5, 15% even now. I mean, not now.
Right.
It was till yesterday, 11.9. So it will become, say, 14 point something, and say half will be 20% plus some surcharge. So you are reducing 12-15% per annum from the 12%.
Right.
So you are at 10.
Right.
So how can it not matter? Please explain to how it cannot matter
Yeah.
that the other market was giving, let's say, 9 only.
Yeah.
and we were giving 12.
Yeah.
But when we give 10 and they also give 9, then obviously relative attraction goes down. I mean, it doesn't have to come tomorrow morning, but it is bad.
Got it. No,
and for what end game? To subsidize gold?
Yeah. No, points taken. You know, Samir, let's listen to the finance minister who's speaking, and then we'll come back to you.
One second.
Selling off about 6%. Samir Arora is back with us. Samir, thanks for joining back. Just complete those points, I mean, that you were making. Interesting kind of direction you were going.
Sorry, I forget which one, but I was saying big picture. That if the system can understand and accept that, you know, if you increase duty on cigarettes a little bit, then the gross collections go down because there is a sensitivity and elasticity. At some point, they have to do that for STT stroke capital gains taxes. Because just because our fund managers come on TV and say it doesn't matter, doesn't mean it doesn't matter. It matters. And there'll be that sensitivity at a point. But I think as an industry, we've been unable to convey that. Because the cigarette guys have been able to convey. That's why even when there is a need for taxes, cigarettes have been spared again and again. And we increased long-term capital gains by 2.5%. And I was saying one more thing, that 2.5%, and not just 2.5%, but the fact that it's a non-round number of 12.5% makes me feel that this is going up more to 15 maybe, or whatever, maybe 15 only. But it is definitely, this 12.5 is too much in between, and it's not a round number for it to be a long-term number for a long-term capital gains tax.
It's going up to a round number.
What I'm saying is normally taxes are not like this.
Yes.
That, you know, that's what I meant. It'll be rounded up to 15.
You know, we had
these numbers.
We had Ramdevji earlier with us who was talking about how dividends, he was comparing dividends and buyback. He was saying that, well, why should companies give out dividends now because of what is happening?
No,
I mean,
in fact, I heard that. I think you guys clarified that it will be taxed as equivalent to dividend.
Yes.
So now there is no difference.
The arbitrage has gone away. But you know what? Another point that Mr. Ramdev made was that capital gains tax can be handled as long as there is capital gain. Now,
this is all story. I don't do stories, please. Even though Ramdev is my friend, I don't do stories. What does that mean even? I don't understand. As if other markets are giving negative returns. They are giving lower returns than India. But it's not that they are negative returns. And we can't keep looking at China in that sense, because if you look at China from 2010 to 2020, it outperformed India.
Samir, you made the argument on, you know, dollar returns. Big picture, next 2 to 3 years. Okay, so big picture, next 2-3 years, you're saying that the Indian market will at best give you just 10% return per year?
No, I don't say that. All I'm saying is that every time we do this, we reduce the relative attractiveness of India. That is all I'm saying. And that matters. It may not matter in 1 year, but it matters. According to me, in the last 5 years, we may think India has done well, but it has mattered in the sense that the foreign flows have been less. And why should foreign flows be less? Why should both not be there? You are making it less attractive. And at some point, the STT has to be counted in the taxes collected from the capital market activity or whatever, stock activity. We can't have those two as separate, because the private equity guys are not giving... the real estate guy might be giving in some form, but private equity guy is not giving you STT. Then why should we compare our taxes with him?
Point taken, Samir. Yeah, I mean, there is taxation which has gone up, and you know, sort of made sense of a lot of that. Samir, thank you very much for joining us. It's a pleasure having you here, and hope we can speak again soon on some of these aspects. As views get settled, and you know, if there is any fine print, etc. It doesn't look like it. I think it's already pretty settled in terms of what has happened. We heard it from the finance